Hi, good day traders. This is BULLISH here, and I'll be making my analysis on EURJPY. EURJPY, of course, is presenting us with a very beautiful setup, but then I want to just do my market breakdown, like what we have on this pair, what has been happening, and then the current story of price, where the market is currently. I want to do my analysis and show you guys what I have on this pair. So first thing to note is that the market was initially like in a downtrend. From this point that we had the price feed, the market was building a lower movement of a very clear lower movement. So now let's see on 6 months time frame. Now I'm starting from the 12 months to show an overall view. So on the 6 months time frame here, it's quite clearer, okay? And we can see the market. Now I had an imbalance here. Yeah, very good. So I had an imbalance here that the market came back for. Okay, like after taking out this low, this previous low here, the market came back to immediately fill this imbalance. Okay, of course, not the full imbalance, but then the market mitigated this point then and then created a new low. Like following the story of price, just like I mentioned, by creating a new low, the market returned back, created a newer low, okay, following a new structure movement now, a new order flow. The market created a new low and then we had a retracement back. So the retracement came back for the supplies that created this low, okay? The market returned back to this supply zone here, the supply that was responsible for this new low, okay? And after creating or rather mitigating that supply zone, we had the market selling to the downside. Now, what happened again is that we could actually expect more continuation to the downside because we have seen the market, respecting this order flow, right? But the market closed above this point, above this structural point, hereby shifting the structure to the upside. Okay, now we have the market structure upwards, not downwards anymore. In this case, we are now bullish. Okay, from this point on the 6 months time frame, we are now bullish. So market returned back. There was a return back to the order block, which is the origin of this whole move. Okay, the market returned back to the origin of this whole move. Now, one thing that we saw here is market returning back. So all this move here was a return back, what we call the RTO. So let's see that clearly on the 3 months, how the information we have on the 3 months time frame. Now, on the 3 months time frame, the order block, which is a demand zone that the market came back for, was this week here, okay, this rejection week that we have here. The market returned back to that rejection week, okay, hereby setting this high as a new week high. Okay, this high has a set as a new week high. Now that means this high is going to be taken out because now we have seen higher high, higher low, then a new higher high should be expected, right? Which is why I have this area as a draw on liquidity where I'm expecting the market to move towards to, okay? The market is attracted towards areas of liquidity and I'm expecting the market to, to deliver this high. Now, one thing to also note here is that the market created an inducement. Now, what is the inducement in that case here now? Whenever I see, let's say you have a base here, for instance, and then this base, there was an expansion, and the market returned back. Now, in my previous lessons that I've always been teaching on liquidity, I say this: when market returns back or makes a retracement back to 50% of a range, that 50% retracement is in some cases not a full retracement. Like the low that is created at that point is a liquidity, right? The low is called liquidity in some cases. Let me show you what I mean by that. Look at this low here, from this low to this high, because you can clearly see that the market made this move up and then the retracement back. Now, this retracement was back to the 50% before the market continued pushing up. So that means the low that was created around here, just like I mentioned, it's a liquidity. Okay, this low here is liquidity, of course. In this case, it's an inducement. But then, if you have watched my lesson, there's a particular thing I explained: primary and secondary inducement. So in this case, this one is a primary inducement. Okay, a primary inducement works in this way. Let's see the market is going down, making a retracement like this. This is what we'll know by primary inducement. Okay, now from the point that the market breaks this high, what you call your change of character. Okay, now the whole of this area here, whereby you have the change of character to the lowest point, the whole of that zone is known as a primary POI. Okay, the whole of that zone is known as a primary POI. and this here is the primary inducement. That means after changing market structure, after breaking structure, the low that immediately retraces. Now, in some cases, the low might not be traced back inside the primary POY. Take note, from this high to the low is the primary POY. So in some cases, the market might not be traced inside the primary POY and just to trace up here before going upwards. And in some cases, price will just return a little bit into the primary POI. So in this case, the low that immediately forms before market continues to take out that high. Okay, take note, must take out that previous high. That low is what you know as your primary inducement. Okay, this low is what we know as the primary inducement. And in this case, exactly what we have here, we check it on lower time frame, that's the kind of thing we have here. This low is our primary inducement that will later be taken out. Okay, so now since we know that this is an inducement and the market has taken out this high, the market came back taking out this inducement and then tapping into this demand zone. Okay, this refined demand zone. It's really clear now, and we are expecting the market to go for this high. So now all we have to do is like find our setup, frame the setup, find our entry, and then look out for where we are going to join this trend. Okay, we are going to look out for the possible areas we can join the market to take out this high. Okay, because now we are going to be scaling our analysis to the lower time frame. So one thing to take note of here is that, okay, yeah, look at the market. This is the primary inducement, right? The one we just explained. You can see what I talked about, right? From this point that we have the break of structure, just like what I explained earlier. From this point that we have that break of structure downward. So that means from this area here to this lower area here, the whole of this zone is the primary POI. But the one that returns back, and see immediately market returns back here before creating higher highs and all of those things. The first one that returns back is the primary inducement, and which market use here, induces liquidity here to tap into this demand zone. And now we have a new range. Now, one thing again to note here is that there's something we call breaker block, right? A breaker block pattern happens or forms this way, whereby the zone, the demand or whatever supply you might want to call it, it breaks a low and then breaks a high. Okay, it breaks a low. That means the supply candle that you have here breaks a low. That means breaks below a previous low and also breaks a high. Now, the one thing or the way we trade this is that along this break here, one thing that you should always look out for is along this break around here, if you find a fair value gap there, then that's a good confluence for your breaker block. Take note, if there's a fair value gap around this area here, it serves as a good confluence for your breaker. And then that's exactly what we have here. Look at this monthly time frame. Okay, this supply breaks a low and of course breaks a high as well. So this supply here is a breaker, right? It's a breaker block. Now it has a fair value gap, which is this point to this point. That means for a re-entry opportunity, you'll be taking your entry on. Now look at, see now, the fair value gap consequent encroachment, which is the 50% of the fair value gap, is matching exactly with your breaker block, which was why we had this entry at this point. Okay. Okay, I think there's another sell side liquidity here. The market created a range structure. Okay, this is a range structure, a range structure, and then we have the breakouts for this market maker buy model completion. So I don't want to watch the whole analysis so that we can get the story of price. Remember, we are still having this high as our target. Okay, so now with this whole idea of what we have seen, how the market has been played on the lower time frame, the whole idea of how market is moving. Let's go to the weekly time frame and then let's see more beautiful price action there. So on the weekly time frame, I'm seeing this equal low. This one is taking out the high. Yeah, we have this beautiful demand area. Now, one thing that happened here was market created a form of inducement. Okay, there was a form of inducement here. And inducement really gives us very good movement. So you can see here, market took out this low, an inducement, and there was a very huge run away from that point. So of course, I love to see things like that, especially inducement. I love to see things like that. Okay, so when market creates this kind of thing, for those that might be looking for re-entry, it does not really give us much of a re-entry opportunity here, which was why the market did not return back to this demand zone immediately. They would most of the time fulfill all their objective before coming back to that area, because a lot of money was used to move all this price upward there. So now we have market creating a a structure at this point. Now we have a structure here. Now, okay, let's now see how that structure is unfold. Now, one thing again I noticed here was this other block here, right? Or this fair value gap to be corrected, right? Very well. I saw this fair value gap as well, which is from this point to this point. Now, yield fed, whenever you see a fair value gap, okay, the first point, or let's say the uppermost part of the other block, is called yield fed, which means the institutional entry, yeah, institutional order flow entry drill. That's the full meaning. Then the 50% is called the consequent encroachment, and then this lower part is called the complete fill. That means the market can either come for the yield fed, which is the top, to respect that point, or the 50% or a complete fill. Okay, of course, one thing to note is that the way you validate market reacting at your fair value gap is the candle should not close below that point. Okay, the candle should not close below. If market was going to use the yield fed, it will not close below that yield fed and reject from there to go higher. If it's going to use the fair value gap, which is the consequent encroachment, it should not close below that. It should just reject and then go up. You understand? And same thing works for the complete fill as well. And then see what happened here. Market respected the yield fed. You see, market returned back to that yield fed, and then there was a push upward. So let's see the daily time frame. Now, one thing again to note before going to the daily time frame is that most cases that market uses yield fed, if you go to the lower time frame, the week to week base serves as a kind of a POI. This is what I've noticed. Like you'll see a POI close to that yield fed that will be on the maybe on the lower time frame in form of a week to week base. Okay, and that was exactly what we had here on this guy here on EURJPY. This is the week to week base. Okay, a demand base, and then the market. This is the yield fed that we marked. Okay, the market took out that yield fed, tap into that demand zone. Like I said, it should not close below. Okay, so that was a confirmation, and then the buy to deliver this high. So now we are now looking at a possible continuation, right? We are looking for a possible continuation, even though we know we are still way now in premium, because now we are really way in premium. So that's why I have this zone here. If we are going to be buying at a discount zone, that means if the market is willing to go deeper for a retracement, these are the demand zones that are at discount. Okay, that would want to consider buying from, not maybe anywhere around here. Okay, so now that we have that out of the way, let's go to 12 hours and let's see. Okay, maybe let's just go straight to 12, the real deal. So now I have this on this time frame. Okay, let me just go to 2 hours to make our analysis more faster. Okay, now the same thing happened here. You saw this breaker block as well. This is another breaker block. Breaks a low, breaks a high. This is the fair value gap. Okay, you can see that fair value gap here. This point to this point is a fair value gap. The 50%, which is a consequent encroachment, matching with our breaker block here, and then market tap into that point to go higher. Now we have market taking out this low, of course, an inducement. Okay, most of the time this is what inducement looks like, what you can call a fake break of structure. Okay, when market breaks this low here, others call it a break of structure, but and if it's placed a new high, that low is an inducement. Okay, that low is an inducement. So simply put, this is an example of inducement, structural inducement, most of to be precise. This is an example of a structural inducement. So now that we have a structural inducement here, making this low a strong low, and hence I'm looking to take a buy from here. Now the reason why I'm not going to look at the buy here is because the market reacted at the breaker block here. So I see this as of course, a good low, right? But then I'm still kind of skeptical about taking a buy from that low, okay? Because I really don't see a deep mitigation here. So I really don't want to trust this other block here. So in that case, but then just for the sake of allowing probabilities to reign and they're not missing out, I will mark this demand zone as well. Okay, because you don't want to miss out, right? So in this demand zone, we'll be reacting. So let me put my alert here for this demand zone, and let's go to like 2 hours time frame to refine. Okay, yeah, this is the demand. Let's go to 1 hour. Okay, let me try to refine it to this point. Maybe 45 minutes. Okay, good. This is fine. So now we are looking for a reaction at this demand zone because obviously that demand is the one that sponsored this move to create a new high. Okay, this other block here is the one that sponsored the move to create a new high, which is why we are looking for a reaction there. But then, since I'm looking at it as also a form of inducement, because a lot of people are looking at this demand also, so it might later now turn to inducement. So that's why I have the safer entry here below here. Okay, at least this will give us 1:8, but it's a trade that we can leverage on and then get a bigger reward off it as well. So that's my overview of what I expect on EURJPY, and of course to look at the higher target. So you can clearly see the monthly time frame. Um, if the month is going to be bullish because we are already close to we are now close to the end of the month. So the market, I think market is going to close. The month is going to end next week Monday, right? So we don't really have much left to do. But then that's my bias on this pair. And let's look at weekly. Let's see if weekly will support it. Okay. So that means we're looking for a pullback around here and then the reaction to go higher. So let's just see. But then we are all like, and fingers crossed, the market has taken out the buy side liquidity now. We can be looking for a sell side, but then we still have our eyes on the price. Okay, we still have our eyes on the on the structure movement that led to that high. So here is the demand zone, like I mentioned, where we'll be looking to take a buy and then a reaction here. Okay, this one will base off reaction, and this one, of course, a reaction also just so to get a lower risk. But that's my overview. I would like you to comment and give your own thoughts about this analysis. What do you think? What are you seeing? And of course, this will actually help me to continue making more analysis and more content of this type. Okay. See you on the next one. I remain Poppy Joe FS.